The financial sector regulators comprising of Capital Markets Authority, SACCO Societies Regulatory Authority, Retirement Benefits Authority, Central Bank of Kenya and the Insurance Regulatory Authority recognize the untapped potential of Islamic finance in the country. The financial service sector is critical in achieving the Vision 2030 target of 10% annual average economic growth. The financial services sector is expected to stimulate significant increases in investments and savings by mobilizing both domestic and international resources. The aspiration articulated for the financial services sector in the vision is to create a vibrant and globally competitive financial sector that will promote a high level of savings to finance Kenya's overall investment needs.
Implementation of the master plan will play a critical role in the following areas: growing the capital markets to enable us to attract finance for the massive investment programs outlined in Vision 2030, while giving Kenyan savers access to greater diversification in the investments.
The second Vision 2030 Medium-Term Plan 2013 to 2017 lays out targets along the dimensions of access, stability and efficiency. Part of the agenda of access is to offer alternatives to the traditional financial services to enhance financial inclusion and mobilization of resources to support productive economic activities. Islamic finance offers opportunities to enhance inclusion and deepening of the financial services sector by offering options that are compliant to the Sharia law, hence widening the attractiveness of the financial services to all communities.
Islamic finance is the type of finance that works on the basis of the rulings given by Islam. These are the set of rules that govern how a financial product will be structured and how it will be dispensed.
Noting Kenya's geographical position as well as the diversification of our own population, and critically looking at a lot of the growth and development that needs to happen in the country being fundamentally at its core real economy activities, it was identified that Islamic finance or Sharia compliant financing is an area in which Kenya can emerge as a very competitive center.
In view of this, the regulators have put in place strategies to unlock the potential of Islamic finance to support the development of Kenya's economy. The regulators have established a project management office that comprises of representatives from all the financial sector regulatory agencies and global Islamic financial experts with immense knowledge in Islamic finance to drive the process.
The project management office has developed very detailed policy as well as legal amendments, which are under discussion with the National Treasury.
Non-interest financing has made inroads into countries in Africa, including Kenya, mainly through Islamic banking and SACCOs, takaful and re-takaful insurance and capital market firms. In Kenya, several alternative finance institutions have been established, including 2 Islamic banks comprising of First Community Bank and Gulf African Bank, 4 conventional banks with separate divisions offering Islamic products. They include Standard Chartered Bank, Barclays Bank, Chase Bank and KCB Group, 2 takaful insurance companies, FCB Takaful Insurance Agency Limited and the Takaful Insurance of Africa, a re-takaful product and a Kenya Reinsurance Corporation, 2 SACCOs, Takwa SACCO and Takaful SACCO, capital market firms such as FCB Capital and Genghis Capital, which operates an Islamic collective investment scheme. Islamic finance products currently on offer are current accounts, savings accounts, term deposits, credit and debit cards, home and vehicle financing, money transfer, investments, business, SME and corporate financing, sukuk, these are Islamic bonds for sovereign and corporates, takaful, which refers to Islamic insurance for life and general, infrastructure and development finance, microfinance, public and private equity funds. Sukuk has played a pivotal role in infrastructure financing and has been utilized for both public and private projects. As Islamic finance continues to reach new heights, the industry is evolving into a deeper and more sustainable financial ecosystem. Key trends driving in the sphere of Islamic finance include sukuk issuances by governments and the expansion of Islamic finance into more countries in Africa and Europe. According to the Global Islamic Finance Industry Report 2014, the assets stood at $1.57 trillion distributed among the various sectors.
The outcome of Islamic finance is very much similar to conventional. However, the structures are very different because of the prohibition of interest in Islam. So the products are structured in a way that instead of having a borrowing-lending relationship between the bank or between a financial institution and a customer, the financial institution instead undertakes different types of financial transactions that may include trading activities like buying and selling assets and making a profit on that sale. And the profit generated from the financial outcome of that project will be then shared between the financial institution and the customer. Now it could be profit and it could be loss as well. So that's why it's very different from conventional finance.
With underlying principles that govern Islamic banking being a key consideration. These are mutual risk and profit sharing between parties, assurance of fairness for all, and transactions based on an underlying business activity or tangible asset. Globally, Islamic banking is the largest in terms of size when compared to the other fields of Islamic finance. Looking at the consistent growth in the Islamic finance market, there is potential in tapping the market to fund the various productive projects within the public and private sectors in Kenya. All Kenyans are encouraged to explore the various products and services being offered in the Islamic financial institutions as they consider securing resources to expand their businesses or improve their lives. The Capital Markets Authority has set up a whistleblower portal on its website to give whistleblowers an opportunity to report malpractices in the capital markets. Through the portal, you can indicate the nature of the malpractice, the place, date and time of its occurrence, information on key suspects, and details of persons who can verify or provide further information. Through the whistleblower portal, you can share anonymous but verifiable evidence to complement the authorities' investigation and enforcement efforts. As a whistleblower, you are at liberty to share your contact details or remain anonymous. We assure you that the whistleblower portal is safe and anonymous. To remain silent is to be complacent with the malpractices you see, so do not hesitate to report to the authority. If you see something wrong, anonymously and safely report. To contact us, write to us on corporate@cma.or.ke. Visit our website www.cma.or.ke or come to our offices at the Embankment Plaza, 3rd floor, Longonot Road, Nairobi. You can call us on 254-2022-64900. You can also contact us on Twitter @CMA Kenya and on Facebook as CMA Kenya.